Yep, let's see how much it lasts. For now, from the lows of 47.80 that we hit on Friday, it's almost a 3% pullback that you're seeing. Courtesy global markets, of course. Mark Mobius of Franklin Templeton Investment joins us now on the line from Monaco to discuss a whole host of issues that we've seen so far. Mark, hi, afternoon, and thanks so much for joining in. If you read between the lines of what global leaders have talked about over the weekend, then it's not a foregone conclusion that Greece will exit the Eurozone. What have you made of the comments, and what would your assessment be of the way forward now?
Well, I think now we're in a situation where the markets will begin to take over, and it will be very difficult for the policymakers to change the trend of events unless they act very quickly and very forcibly. Because what you're going to see is exit of course, we've already seen the exit of money from Greek banks, and that could spread in a general bank run to other parts of Europe, so where the economies are weak and where the debts are high. So I think this is something that requires pretty urgent attention on the part of the leaders, the European leaders.
Do you think?
So it's in the past, I felt that it was very unlikely that Greece would exit the euro, but now, with the trend of events taking place the way they are, we could see a general exit from banks, and that would lead to Greece leaving the euro.
Do you think policymakers will wait to see the election results of the 17th of June in Greece, Mark, or are you expecting some policy action between now and then from the ECB or from any of the European politicians?
Well, let me put it this way. If they don't act before the next election results, then the game is over, because we're in a situation now where the markets are beginning to take over and beginning to assess the risk of keeping money in Greek banks and so forth and so on. So we've already seen a general exit of deposits from Greek banks, and that could be accelerating if it continues at this rate.
There is a meeting that will be held in Brussels this week, Mark, and there are many issues that are being proposed over there. Example, common euro area bonds, etc. Do you think all of these tools are just stopgap arrangements, and inevitably it will lead to an exit of Greece from the eurozone and a spillover effect on the other peripheral economies?
Well, everything is stopgap in view of what has happened right from the very beginning, in the fact that banks have been allowed to get rescue from the bad decisions they made regarding these loans and the debts that they piled up in their own books. So it's been stopgap all the way, and that includes the U.S., by the way, as you know, QE1 and then QE2 and so forth and so on. So it's just a matter where confidence has to be restored. That's the key.
How are you and global investors approaching emerging market investing now, Mark, particularly countries like India, which have not done very well after the first initial rally that we saw in January and February?
Well, in view of the turmoil, emerging markets and turmoil in the developed countries, the emerging markets look pretty good, including India, because of their stronger foreign exchange position, their lower debt to GDP levels, higher growth levels. So in some ways, emerging markets are quickly becoming a sort of refuge.
So for the rest of the year, do you think that we've set a base for ourselves in terms of the sell-off, or do you think the general trend is downwards and hedge funds are reducing their exposure towards emerging markets?
Well, what happens in a case like this, if there's general panic in Europe which spreads, then all markets are in trouble. Then you see everything heading down temporarily, like we saw during the subprime crisis. This, of course, opens up all kinds of opportunities for those people who have cash ready to put to work. So I would say, it all depends on how this pans out in terms of the developments and what the market reaction is.
Finally, what's your own assessment? Do you see the crisis deepening through the summer, and do you think we may have seen the highs for the stock market for the year?
I don't think it's going to get any worse. I think a lot of the bad news is already in the markets. So there's a good chance of a healthier equity situation. You must remember that with fixed income, with the rates being so low, the risk is pretty high. If rates begin to climb up, then people holding low-rate bonds are going to be in trouble. So I believe that there's going to be a shift into equities, and of course that's good for emerging market equities as well.
Okay, Mark Mobius, on that positive note, thanks so much for joining us. At least the ending comment was positive in the market.
Yeah, but he's also worried. You could sense that because of the European situation. And I guess all the investors who are sitting out there would be watching it very closely.